Thank you for joining me. I'm Alex, and I would like to talk to you about Canopy Growth Corporation. Now, this was suggested by a comment, or in a comment rather, and that's why I picked this one. And there's many stocks like this out there, and they all have giant growth, if you know what I mean. But let's get into this. So what they do is something I cannot tell you without fearing that YouTube might have a problem with the video. But as I said, there's many stocks like this because things got legalized recently, and so there are states in which this whole thing has suddenly become legal, and so instead of private growing, there's big companies that want to get into the business, and obviously growth is happening because, Anyway, so the price is currently $26.34, which is down 8.5% today or yesterday, probably, because I'm posting in the mornings for reasons. And the PE is negative 15, which is actually far better than I thought, considering. So, dividend and payout ratio is both 0, as is obvious with new companies. Revenue is $226 million, which is up 200% from the previous year. Earnings of negative $685 million, which is down 800% from the previous year. So they went from 70-ish million in losses to almost $700 million in losses, which is obviously not great. You would kind of hope that a company is going into the other direction, but things are kind of going in the right direction in the assets. So total assets, $8.7 billion, up 500%. Total liabilities, $1.5 billion, up 600%. And net tangible assets of $4.9 billion, which is up 600%. So obviously they're doing things right. Now, are they doing everything right? Are they going towards profitability? Are they fairly valued? And to all that, I say, I don't remember the questions, but probably yes. Now, obviously, an increase in net tangible assets is a really good thing. And I would think that that is pretty much the same as a profit, which again surprised me, because an increase in net tangible assets of this magnitude is humongous, and I honestly don't know why that isn't reflected in the income statement, but it is reflected in the balance sheet. Now, obviously, PE ratio of negative 15 means that for the $26 of share price, they're losing $1.70-ish. I think it was $1.71 per share, which isn't terrible. It's obviously not great, but if the PE was like negative 5, then I would have a big problem with this stock. As it is, I think that they're moving in the right direction because they're growing their net tangible assets, which should push the share price higher in the long run. So I think that it is actually fairly priced. And now I'm not going to buy it right now because there's still many things that could go wrong with the whole legal situation right now. And I think that there is way too much hype about the stocks still, even though that's gone down a little bit. And I think that kind of pushed the share prices higher than they otherwise should be. But looking at the fundamentals and leaving the whole legal situation aside, I think it's a reasonable buy. And I think that not only are they going to be profitable, they're going to be hugely profitable, and they're going to grow huge. But and this is big. Federally, things are not legal right now. Federally, the whole banking system does not really play nice. Federally, this thing should not exist. And so there's many things that could happen where the federal government changes the laws that make this stock basically bankrupt overnight. Now, obviously, you will see it coming, and you will see it coming months ahead of time. But so will everyone else, and the stock could drop by half, probably, overnight, without much of a advance notice. So let's say that a proposal makes it to the Senate floor, and they decide to hold a vote on it. Then, overnight, the whole stock will probably drop by half because the uncertainty makes it not as valuable. Now, there's plenty of people who will stay in the stock because things are going to go the right direction for the stock eventually. And even though it might not be this year and it might not be the next year, with the next government, I think that we will see a nationwide legalization, and I think laws will be changed, and I think that the banking system will be overhauled to allow this whole thing to happen. But for me, the uncertainty with the laws, especially with the current administration, is just too dangerous for me to invest in this stock. So, to summarize all that, obviously for a value investor and for a dividend investor, this is definitely not the stock for you. For a growth investor, I think this is a good stock if you can ignore the legal situation and if you can wait a few years. So if your investment horizon is 5-10 years out, I think this is a good stock, and I think you will get the returns that you really want with this stock. Now, I don't know if I can deal with it because I don't know if I may at some point have to pull money out of the stock market to, pay for emergencies and whatever, because my financial situation is not as stable as you would think. So with that said, if you invest over 5 to 10 years, I think this is a good stock. I don't think you should invest a significant portion of your portfolio into this, but 5 to 10%-ish, if the rest is fairly well diversified, at the very most. If you can deal with the swings, if you can deal with the uncertainty, and if you can deal with the legal situation. With all those disclaimers, I think a 5% to 10%-ish portion of your portfolio. To make another disclaimer, if the rest is in fairly safe stocks, because this is not. So that's it for me for today. Sorry for the rambling. It's just very hard to assess a stock like this without going into too much detail on all the things that could go wrong. Anyway, if you want to suggest a stock for me to look into, make sure to leave it in the comments. And if you haven't already and you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.